It's the biggest consumer company in the world, and today Procter Gamble warned that weaker consumer spending coupled with higher commodity prices could slow its earnings growth. The company cut its annual profit forecast by 5 cents, between $3.91 and $3.96 a share. Its earnings for the fiscal third quarter were 11% higher than a year ago at $2.87 billion, or 96 cents a share. That's a penny below the average analyst forecast. And revenues rose 5.5% to $20.23 billion. So there's more detail than you could probably ever want unless you're a shareholder. Joining us now from the company's Cincinnati headquarters, CFO Jon Moeller. Jon, thanks for joining us. Let's talk first about the cut here. Why the concern? Is it more the commodity prices than the consumer demand?
It's more commodities than anything. And to be clear, what we did was narrow our guidance range. So we kept the bottom end of the guidance range and just brought down the top end by a tad. But importantly, this quarter we delivered, as you said, 5% all-in revenue growth, 16% all-in earnings per share growth, and we're forecasting that to accelerate as we go forward. So our guidance for the fourth quarter is 4 to 6% organic sales growth, 13 to 20% earnings per share growth. So while we trimmed guidance a little bit, still a very healthy trend and a business with very strong fundamentals.
Jon, yesterday Ben Bernanke saying that he's confident gas prices should come back to normal. He seems to feel that way about commodity prices pretty much across the board. Are you concerned that commodity prices will stay at the levels they are now? And are you able to pass on those increases to customers?
Well, we basically plan on the basis of spot prices, so we're planning that they stay where they are. I certainly hope that Mr. Bernanke is right, and we would welcome that news. We're looking at this comprehensively in terms of how we manage commodities staying at the level that they're at right now. The first thing we're doing is dialing up our own cost savings and productivity efforts. We're looking for and utilizing substitute formulations at lower cost. We're reducing our overall dependence on commodities and energies through our sustainability efforts. We just launched, for example, compacted powder detergents in the United States. They use less packing material. They're more energy efficient to transport. And we will take pricing as part of this mix as well, but we'll do it in combination with innovation in a way that's hopefully value accretive for consumers.
So you mean you make a product that does more than it did before, or you package it differently, add more of it? Is that what you're talking about?
Yeah, absolutely. So a great example we announced this week, it'll be launched in September, a fantastic innovation on Tide laundry detergent. It's called Tide Pods. It's a super concentrated unit dose 3-in-1 laundry detergent that provides the great Tide cleaning and stain removal and brightening in a super convenient form. It's really quite remarkable. Typically, 68% of consumers, when they use a laundry detergent, report that they're satisfied with the amount of time and energy it takes to achieve an excellent wash result. 97% of consumers who have used Tide Pods report they're satisfied with the time, energy, and excellent results they experience.
So that's an example
of a great innovation that will build consumer value.
What about, you said you plan based on spot prices. What about hedging to deal with swings in commodities prices? How do you do that?
We do some hedging, but we have a lot of natural offsets within our portfolio of the combination of commodities, currencies, and interest rates. As you know, a lot of what's driving the commodity cost increase is actually a decrease in the value of the dollar, which many commodities are denominated in a world pricing environment. And so there's a help there that helps, that naturally helps offset some of the commodity costs.
How do you look?
One of the ways.
So let me just ask, because we've only got 30 seconds left. How do you see the consumer here? We've been talking about the commodity side of the equation, but the consumer is huge, and you guys have a great view of the consumer from Cincinnati. How does the consumer look to you going forward this year?
The consumer in developing markets is doing very well. In developed markets, it's stable. It's not great, but it's stable. And there are some real points of light. For example, our market shares in Western Europe are up for 15 consecutive months. In North America, they've been flat or up for 13 consecutive months. That contrasts with private label that's been down for 9 consecutive months in Europe and down 5 out of the last 6 months in North America.
Got it. Hey, Jon, thank you so much. Really appreciate your time. Jon Moeller there, CFO, Procter Gamble.